there. That's much better. I'm just going to go ahead and start. Hang on one second here. I'm going to go ahead and get started because obviously it's about 2 minutes after 6. I'm Grogan with Tammy Grogan and Associates, Keller Williams Chervenic. And I am, of course, gone to Zoom first-time buyer seminars. We used to do this at the Barrel Room prior to COVID, and I would get the whole half of the Barrel Room in North Canton. We'd have free drinks and appetizers, and we would have 20 people that would attend. And it was just a really nice evening. So unfortunately, with the situation the way it is, we haven't gone back to those live meetings, but this works just as well. And we have William Dawes. Say hi, William, with Fairway. And,
good evening. Nice to see you all.
He is with Fairway Mortgage. And of course, if you're unfamiliar with Fairway, William Dawes, he has a wonderful website that you can go out there and kind of visit his track record, which he is incredibly seasoned in the financial side. And if I can advise anyone anything after 34 years in the business, I always say you as a buyer are as knowledgeable as the people that you associate yourself with. So oftentimes there's programs that are out there that are available to you that maybe if you go to one certain type of a lender, sometimes the banks can't offer programs that you will find through a Fairway. They do community first programs, which are great, especially if you have limited income sources or limited money. USDA, VA, FHA, they really cover the gamut of the different types of programs. And again, I think what you'll find as a first-time buyer, what somebody has to offer and what is available, if you're not aware of certain programs, they're certainly not going to share with you things that they can't offer you. So again, I think that's where you're going to find William Dawes is just an excellent source for you as first-time buyers. Also, we have Mindy Quammen with Ohio Real Title. And of course, your lender and your title company just work cohesively throughout your transaction to keep things moving forward and to be ready for closing come closing day. So again, I think you're going to find Mindy is somebody that is going to share some other side to your transaction and really kind of educate you a little bit here in the next half hour about how all these little parts and pieces fit in. So I'm going to let William Dawes start first. And if you want to kind of talk about the programs, and, we certainly had some interesting things that we discussed at the meeting last Thursday that maybe you want to share as well. So I'll let you take the ropes.
Well, thanks so much, Tammy. Great introduction. I appreciate it. I would say that it's commendable for all of you to be here and be paying attention, because as Tammy said, some of these things that we're going to go over, you might find in a Google search, but you may not have someone in your network that will be able to answer questions about these things and give you details about these things. And that's kind of what we're here for, right? We're here to advise you and give you guidance on programs that are specific to you as a first-time home buyer. This is my home office, so this is not my work office, I promise. So dialing in from the evening, away from the family, and I appreciate you guys taking time away from your families so that you can hear what we're going to go over on being a first-time home buyer. And so what I want to do is I just want to talk a little bit about some of these options that are available to you. And one mission that we have is taking the stress out of the home buying process. There's a lot that goes into just our normal day-to-day lives, right? And when you think about buying a home, that adds a whole nother layer of stress in terms of moving, financing, down payment, monthly payment, etc. And we really want to try to help take that stress out of the process. And so I'm just going to briefly go, I promise I will go quick. We're going to talk about the benefits of home ownership, getting ready for an application, credit score, loan programs, down payments, programs that help you with down payment, do's and don'ts, the loan process, and why now specifically is a good time to buy. So when you think about making a house payment, one thing that's really important that a lot of people may not have on their mind when they think about buying a home, right? Most people, when they think about buying a home, are looking to move their family into a new school district, or they're looking to change where they live or improve where they live, or they just want to have the ability to do what they want with their own space. Keep in mind when you're making those rental payments, you're paying someone else's mortgage, right? So you're not building equity, meaning equity is this term for as you pay down your mortgage, your home begins to be worth more. And the difference between what you owe and what that home is worth is called equity. And that's money that you have that's available to you that's in your home, right? It's not cash that you have, obviously, but it's money in your home. The interest that you pay on a mortgage can be tax deductible. And obviously, if you renovate or put money into the home, you're increasing its value. If you do that where you rent, you're giving your landlord that money by increasing the value of the home. Now, when you think about building equity, something that I like to share, some stats, is just sharing that, listen, in the first quarter of 2021, the average homeowner gained $33,000 in equity. So they did nothing more than simply own a home, and they made $33,000 in 4 months. I would say that if you were to come to me and say, William, I would allow you the opportunity to make $33,000 in 4 months, I would be looking for a place to sign up for that. Obviously, the appreciation values change pretty dramatically year over year and based on market, as you can see. But this just puts some numbers behind that concept of what it means to build equity. One thing that you'll see here is that even in the last decade, equity has more than doubled. That part of it is pretty important too. So when you're thinking about buying a home, here I'm just going to go through these quick. There's some things you need to know. And of course, the top one is budget, right? How much can I afford? Because you may get a lender like me who says you can afford $1,500 a month. And you may laugh at us and say, no, I really can only afford 1,100, right? And that's something that you have to have prepared when you go to talk to a lender, is that budget of what you know you and your family can afford. Second thing, of course, is down payment. How much money do you need to have out of pocket? Do you have the ability to come up with that down payment either from a gift, money that you have saved, or perhaps a retirement account, 401k that you have at work? Something that a lot of people don't think about is how long do I really plan on living here? If you're starting a new family, for example, and you just got married and you're moving into a home, and you plan for your family to get larger as the years go on, definitely something to consider when you're purchasing, because that may impact how much you're willing to spend or put down out of pocket up front. And the last two things, yes, go ahead.
And I just want to say, again, we advocate, and when I say we, myself and my team, we advocate obviously working within the parameters of what a buyer is comfortable with. So, we all know that just because you're approved at, $100,000, but or $200,000, when I want to spend, $160,000 or $170,000. I think it's incredibly important that you convey that as a buyer, not only to the lender, but to the agents, because again, the pre-approval letter is what guides us, but the pre-approval letter is also just that. And so if you don't want your pre-approval letter to show $200,000, then you need to make sure of that, because I think a lot of people go to lenders, and that is a little bit of a fear about that pre-qualification step. But I think as a buyer, you have to understand you have full control over that. So if you go into your lender and say, hey, my limit that I want to spend is $1,200 a month, then by golly, you work backwards, correct? And with here's what you can afford to buy, and here's where you need to be. Because again, I think there's nothing wrong with that, because at the end of the day, I think as a buyer, you want to feel comfortable that you can afford the house, the gas, the electric, the food, and everything else in between in your life.
Yeah, and I would say that a lot of the times, that adds strength to your file. When you think about buying a home and getting a mortgage, if you're trying to stretch it to the top limit of your affordability, that is one layer of risk that a lender will take into consideration versus not trying to push it to that limit.
Correct.
And you've got to, you determine what you can afford within your family's budget, not what a lender says you can afford, right?
Correct.
You steer that ship.
Yep.
So in terms of paperwork, you got to start thinking about, okay, in today's world, we don't get pay stubs. We don't get bank statements, right? These things all are done digitally. And so you've got to be prepared to know, hey, where do I get my pay stubs? How do I log into my employer's system to get these pay stubs? Same thing with online banking. Do you have the ability to pull those statements? And where are your most recent 2 years W-2s and tax returns? These are things we can guide you with as you go along. Now,
Correct.
The most important thing to consider is credit score. When you think about obtaining financing, the major determining factor in what programs are available to you is credit score. And I like to just hit very quickly on how your credit score is determined, because some people have a misconception about this. So 35% is, are you paying on time? 30% is amount owed. Now I want to clarify this because some people think I have a credit limit of $3,000 and I owe $2,900, but I always send in more than the minimum. Be very clear that sending in more than the minimum does not have an impact on your credit score. What does is how much you owe relative to how much your credit limit is. So if you're up at 95% of the credit limit, that's going to lower your credit score, even if you're sending in extra per month. Moving down that list, go ahead.
So what you're saying is if you continuously charge it up to, you have a $3,000 limit, but you keep charging it up to, $2,500, they're going to look at that aspect of how you're spending, correct?
Yeah, so if you think about this logically, when you have a car payment or a student loan, you have a fixed payment that you make every single month. And so all the credit bureau, there's this algorithm that calculates your score. All that algorithm can tell about you is, are you making the payments on time? Very simple yes or no question. With a credit card, however, they can learn one extra thing about you. Not just are you making the payments on time, but how much do you owe? And do you have a conservative attitude towards credit? Right, so a conservative attitude by the credit bureau's definition is, do you owe less than 30% of the credit limit? So if you have a $1,000 credit limit, realistically, you should never owe more than $300. Every dollar you owe more than $300, your score goes down. The closer you get to the credit limit, the lower your score goes. On the flip side, the lower amount you owe, the less you owe below 300, the higher your credit score goes. Doesn't matter how much extra you send in per month. It matters how conservative you are with your use of credit. If you can borrow $1,000, did you choose to borrow $999, or did you choose to borrow $50 and $100 to pay it off?
And just really quick, when you talk about credit, and again, if people, but I have 5 credit cards, but I only use one, that still is impactive to your credit, correct? Because you have the potential of charge card 3 with 2,000, charge card 4 with another 3,000. Am I wrong or right about that?
Yeah, they will look at how much credit is available to you in total. So if you have the ability to access up to $5,000 in credit between all of your revolving accounts, and you only choose to make use of $200 or $300, definitely that's that 30%. That's that amount owed. That's one of, you see in all of these numbers, that's number 2 of importance when determining your credit score. Yep, great question.
Yes, so you're better off if you don't use those cards, then get rid of them and shut them down completely.
Don't close them. So if you close the accounts, then they no longer factor into the algorithm. You never want to close a credit account. Because if you look, one of these factors is your length of credit history, the 15% number. If you close that account, it no longer reports. And as a result, the length of your credit history will go down because that account will always stop at a certain number of months when that account is closed. So leave it open. I'll give you my trick. This is just a little tip that I use. So I've got 4 different credit cards. My electric goes to one, my gas goes to the other, my cell phone goes to the other, and there's one that I keep in my pocket. This way, each of those credit cards have activity, but I'm not carrying them around, and they can't cancel them because I'm not using them. Instead of paying Ohio Edison, I pay the card off. Instead of paying Columbia Gas.
That's honestly, that's a really great recommendation. And again, I think as first-time buyers, I think there are so many misnomers out there about the lending side, the title side, everything, because, you know, there are so many facets to what we do anymore, and especially in the lending, because we all know that the crash of the market really impacted a lot of the guidelines that are followed today as a result of that.
And listen, if you're using Credit Karma, Credit Karma is a great app. Like, we're not affiliated with them. Some credit card companies have abilities for you to look at your credit. This is all great, but there's one thing you should know. Each industry has their own algorithm for how they will arrive at your score. So you as a consumer will see one score, which will be different than a car dealer, which will be different than a credit card company, which will be different than a mortgage company. Here's why. Car dealership, they don't care how you pay your credit cards. They care how you've paid prior cars. Their credit bureau is going to give more weight to previous car payments. Credit card companies, opposite. They don't care how you pay your cars. They care how you're managing your current credit card debt. Their score is going to give more weight to how you manage your credit cards. In the mortgage industry, it's an aggregate of everything. As a general rule, the score you see as a consumer on Credit Karma, for example, will usually be a little bit higher than what we will see in the mortgage industry. So if you're seeing a 660, we may be closer to 640, 650. If you're in that high 700s range, we're going to be right there with you in that high 700s range.
And just on that quick note of credit scores, just so again, I feel like we could talk for hours about
all night on this one. Yes, we could.
Yeah. On the note of credit score, if we could share with everyone really quick, like, what is the bottom and where can that take you? Because I think a lot of people misinterpret and the importance of establishing credit. Unfortunately, guys, in today's world, you have to have some debt or you can't even get a loan, which is crazy. I mean, you could be the best paying person in the world to your rent and your whatever, but you still have to show credit. So
yeah, the scores range from 350 to 850. Realistically, we normally see people in this 500 to 800 threshold. Very rarely do we see people under 500. Very rarely do we see people over 800. If you're in the 500s, that's a fixable place to be. So you need a 600 for our financing using a FHA loan. That 600 credit score gives us that minimum, that baseline of you being able to get a loan. Obviously, anything higher than that gives you more options out of the box. I want to push on from that because, like you said, Tammy, we could talk credit. I'm happy. Like, if you have questions, call me, email me, text me. We help thousands of people with credit. If you call and you're below the score, we're not just going to shoo you out. This isn't a reason for embarrassment. This isn't a reason to not pick up the phone and call. We have all had issues in our past with credit. This isn't something that you need to be embarrassed by. It's something that you need to know. Let's move forward. Let's take where you are and go forward.
Correct. And what I say to a lot of people is, say, for instance, you had a bankruptcy in your past. Hey, guys, you know what? Things happen in life that are out of people's control. And, I always say, sometimes bankruptcies, they can be blessings for people. It gives them the opportunity to wipe their slate clean and grow from that experience. Sometimes it's a medical. I mean, sometimes it's absolutely out of people's control. But at the end of the day, if it was just an unfortunate circumstance where you lost your job and you had no money to make your payments, it is what it is. But you have to realize that there are ways to repair it. make it better and move forward and buy a house. So, it's not the end of the world that that occurs. Now, what is the end of the world is if you're the repeat offender, correct? Because I was,
Yes.
they'll spank you once, but I don't know if they'll do it 2 or 3 times. But, at the end of the day, I think you have to take whatever that opportunity is to rebuild yourself and realize that oftentimes what is it in an FHA? From a bankruptcy, you can reestablish yourself in what, a 2-year history?
2 years from the date of discharge to be able to purchase FHA. Yep.
Yeah, which is amazing. So, and again, we could go on and on. I feel like we could spend a whole 2 hours talking about credit. And
Yep.
Again, there's so much to the types of loans that you can acquire based on your credit scores. And again, that's where a lender like William Dawes will help educate you to get you to the right type of loan. And, guys, you can buy a house with as little as 3.5% down. Well, maybe that's your tax return. That's coming very quickly here. And that's where I tell people, think about that as your down payment money. Because if you take that and we're able to get the seller to contribute towards your closing costs, voila, you can have your house with very little money out of your pocket, to be honest. So, but just to kind of hop to Mindy here, and again, we really appreciate everybody taking their time tonight because I know it's hectic after work. But from William Dawes, you actually will be to like Ohio Real Title, Mindy Quammen, and Mindy is the one that will take all the loan papers from William and really get things kind of packaged and ready to go so that the buyer can come in and do the signing for their home. And you want to kind of step in there and kind of share a little bit about your process.
Yes. Well, thank you, Tammy. And thank you, William. It's wonderful to be here tonight. And I love the idea of educating first-time home buyers. I think it's fantastic. So I appreciate.
We lost you there, Mindy. One sec.
Okay, can you hear me now?
Yep, we sure can. Go right ahead. Sorry about that.
Okay, that's fine. No problem. So anyways, I'm just excited to be here. So thank you. Thank you, Tammy. Tammy and her team are fantastic. Can I just put a plug in for them for 1 second? They have systems that are absolutely amazing. And it is a complete delight for me to work with them and for our office to be working with the Grogan team. So I just want to say that first and foremost. But yeah, we come in, we are the third party disinterested as a title company, and we come in and we work with Williams company, with Tammy, with her team, and we bring all of the pieces, parts together. So once a fully executed contract is in place, we will take that and run. And what that means is we will order a title search, which is a one-time fee where we issue title insurance to you as the buyer so that you know that when you become the owner of the property, that you will have free and clear title of any liens or encumbrances that could potentially cloud ownership. So you will receive at the end of this process an actual title policy that ensures that you own that property along with the deed that was filed at the courthouse. So
and again, just to clarify, a cloud is a defect. Say that there was another mortgage out there that was not discovered in a title search, and you close on the house, and 2 years from now you go to sell it, and lo and behold, somebody finds that there was this mortgage lien against the property, or a lien from a creditor, somebody that did work on the house, correct? That is what we call clouds on title. So I just kind of want to clarify what a cloud is. So
yeah, thank you, Tammy. Yeah, it could be a mechanic's lien. It could be a will that there was somebody on a will that, that it did, that trust or that power of attorney didn't get handled correctly. It could be all kinds of things that
it could be an easement. That's a cloud.
Yeah.
Obviously I personally had an easement on my personal home years ago that ran under my home. And again, that is considered a cloud. That's where that title insurance will kick in and help get that resolved. So
yeah, yep. So we're different. we're different than any other insurance in that we issue from the time of title transfer going back in history. So you know that when you are given ownership, that you are the owner of that property moving forward. So that is our part of issuing title insurance. But then the second part of it is we bring all the paperwork, all the parties together. So you would actually be hearing from us when you come to sign your paperwork. But before that happens, before we transfer title of ownership, you will receive a pre-closing package from us. And the reason that you receive it is so that we can understand how you would like your deed, what type of deed. There's many different types of deeds. We want to know, who you would like to have in ownership. So it just goes through several questions. Also, it's going to ask if you want optional insurance it's a $45 coverage for the time that you're transferring your funds to the title company. Some people do it, some people don't. You're also going to be put into a system that we use where you can monitor your transaction throughout the process. So the good news is you have a realtor and you have a lender that will be communicating with you the whole way. And the Grogan team does an amazing job with that. So these details I'm even getting into are probably even a little bit too detailed, but just so you know, the main thing you need to know is after a fully executed contract is done, you'll have the option to put your earnest money in digitally with our company, and that will show up at the time of closing. And we will be sending you documentation that you'll need to fill out and get right back to us. They're called pre-closing documents, and we can send those completely digitally to you. So you don't have to do the paper format if you don't want to. I know, especially with the younger generation, they just want to do it all digitally through DocuSign. It's super simple. So we can do that, no problem at all. And then you'll be receiving a call from us, and we will be contacting you once we hear from the lender that we are able to have you come in and sign your documents. And at that time, we're going to have you sign all the proper documents that are put in place by the lender that would ensure title transfer. And so it's a stack, but it's actually pretty quick. And we would meet you anytime, anywhere to do that signing. And then after that time, we'll wait for the lender to give us the okay to go ahead and transfer title of ownership. And you would hear then from the Grogan team. They would contact you and say, guess what? You're a new homeowner. And it's a wonderful, happy time. So
It is. It absolutely is. And I think, again, it's really important that everyone understands that there is a lot of working parts and pieces to this process. I mean, obviously, once you get the contract, William Dawes will get the contract, and then he will start his process because, there's like lots of things that are happening on the front side. Once you're under contract, obviously making that what we call formal loan application. You've already gotten pre-approved, but there is other documents and other steps to that process with the lender and working your way through that. Correct, William?
Yeah, I think one thing that we try to do in our end of the business is to do things sequentially, right? It's really hard in our business to think 3 steps ahead. So we always like to say, okay, where are we right now, and what's the very next immediate step? So that pre-approval, when you get pre-approved, think of pre-approval as just a fancy word for I can get a loan.
Yeah.
Right? You're going to meet with a seller, especially during a COVID era. You're going to be walking through these people's homes. They want to know that you can get a loan before they allow you to walk through their house. And that's what this term pre-approved means. That's what this letter that you get presented from a lender means, that you can get a loan. That shows that you're serious about wanting to buy, right? So then the fun part in today's market, finding a house. This is where, just to say that Tammy and her team, they have really outstanding buyer's agents. And that term buyer's agent means that they're out to look for you. Here's the best part as a buyer. You don't have to pay real estate commission. So you've got this pre-approval letter. You've got a realtor who's out there working for you. They're out there showing you homes, and it doesn't cost you anything.
Doesn't cost you anything.
To
That's
have
correct.
this representation, right? And that, for me, you got to have people on your side. You need someone to fight for you, to find you the right house, to negotiate the best price on that house, to help you find a home that's within your budget. And just imagine in life having this person who does all of this, and it costs you nothing. They're paid out of the seller's proceeds, right? So you don't have to worry about that. So you've got this piece of paper, this contract. You found the house. It's the house of your dreams. You've now put pen to paper, and then you come back to us as lender, and we've got 50 some pieces of paper that you need to sign. This is what they call application. When you hear the term application, just know it means a lot of paperwork, right? Fortunately, again, you can just click with your thumb on your phone and sign all of this paperwork up front. Very convenient. And as Tammy said, at that point in time, we're going to get some updated paperwork from you, right? We're going to get most recent pay stubs, most recent bank statements. That house has to be insured. Just like when you buy a car, you got to have insurance on the car before you can drive it off the lot. Same thing when you buy a home, you have to go out and get insurance for this home. Again, we'll help walk you through all of those steps. It sounds like a lot. Just piecemeal it one step at a time.
Right.
Pre-approval, find a home, application. That's when Mindy gets tagged in, right? That's when we know who the title company is. Mindy gets an order from us that says, hey, this person's buying this home. Can you go make sure this home is in sellable condition and that the deed is ready to transfer to this person who's thinking about buying a home? That's truly, after all of that initial set of paperwork is signed, this is when we say go, right? The starting gun fires and we're officially off to the races. And that's when you're 20 to 25 days away from calling a new home yours.
Well, and again, we have lots of little parts and pieces, home inspections. I have to say, the way we operate on my team is, first and foremost, a home inspection is incredibly important. And I know with what has happened, clearly we know with what has happened in the past year, how buyers are negating that right to home inspect. And I have to say, that is a little bit of a crapshoot, because there are things that none of us can see. I mean, we might be able to visually see the windows and the roof and things like that, but none of us can see the sewer line and what lies beneath that, which we know can be very costly to replace. But I really have heartache about any buyer that's going to choose, and I think anybody on my team would feel the same way. We very much advocate doing inspections and making sure that, the basic fundamentals of the house are in rock solid condition, because, if you make a discovery during a home inspection that makes you uncomfortable, if there's, a crack that none of you saw on the, initial walkthrough of the house before you purchased, or, the furnace is like failed, there's carbon monoxide leaking, which pretty much indicates failure. Those are all discoveries that you can't make unless you do these inspections. And again, if you're buying a house as a first-time home buyer, I highly doubt you have another $3,000 or $4,000 laying around to replace that furnace. So, I think that's a bit of a risky thing to do. And again, the way myself and my team looks at it, if there's discoveries made and you can't work it out in that front side, you want to obviously just move on, because we always say there will be another house. It might not be there that day. It might be another week, 2 weeks, month, who knows? But the house will come, and it will certainly be there, and there will be more opportunities. But again, it's from, the time that you get the contract done, the time that you get to the lender and get all those documents. Of course, he coordinates it with the title company. And, we also are there helping guide you every step of the way, because as first-time buyers, we often assume that people understand what we're saying or what we're doing, but oftentimes people don't. It's kind of like when we say it's really important to get pre-approved on the front side. And I'll tell you why. Because if you are only approved as an FHA buyer, then we need to be writing your contract that way. And so without that pre-approval letter with William to determine the type of buyer that you are, the type of program that you're purchasing under, that tells us everything. How much are you putting down? Oh, that person's putting 3.5% down, or that person's putting 10% down. But again, those are all things that we as agents don't determine. That's what the lenders are for. And that's why it's so important to get you pre-qualified on the front side. I think another misnomer about getting pre-qualified is that that is going to ding your credit. And I think that is just a big misnomer that's out there, because I hear that a lot. And William, you might hit on that, because that does not affect your credit, correct?
So think of it this way. When you have a credit score, the algorithm that calculates your score sees an inquiry. So that's what this is called, an inquiry. Somebody has accessed a copy of your credit report. That has risk. The algorithm that calculates your score sees that someone's accessed your credit. You're trying to get a loan for something. The algorithm doesn't know whether you've gotten a loan, whether you opened a new account. So there's risk inherent out there that somebody's accessed your credit. You might have a new account open. That risk leads to an impact on your score between 0 and 9 points negatively. So it does impact the score. Usually it's single digits in terms of how it impacts the score. So you're a 690, you go to a 686, right? Mm-hmm. Now, the cool part about this is the algorithm is smart enough to know if you have multiple inquiries from the same industry. So if you go to one mortgage lender and you find out that you don't like the experience that you're having with them, and you go to another mortgage lender within a 2 or a 3 week period, the algorithm can see that it's a second mortgage inquiry. That second inquiry will not impact your score as much as the first, because they want to encourage you to shop. They want to make sure that your options are open to you. So yes, someone accessing your credit, the more times it is accessed, it will lower your score. But if it's from the same industry, each inquiry after has a smaller and smaller impact on the credit score. One quick thing on the home inspection. There is a misconception, a lot of buyers, that an appraiser is an inspector. They think that I'm getting an FHA loan. When does the FHA inspector come to the home?
Correct.
And there is not. There is not an FHA. That's a
very true misnomer as well. Yes. Mm-hmm.
So what will happen is what Tammy's speaking of is a home inspection that is not required for financing. That's something that you get on your own. Think of it like buying a car on Craigslist. That guy who you're buying the car from, he's trying to sell that car, right? The home inspector is like taking your car or the car that you're looking to buy to your mechanic. And your mechanic is going to give that car a once over, right? He's going to pop up the hood and tell you the issues that you're going to have with that car. That's important that you have that mechanic look at that car to give you the once over. That's the home inspector. The appraisal is what's required for financing. The appraiser's got 2 jobs. First, to assign a value to the property to confirm that what you're paying for it is what it's worth, right? The second job is to make sure that the home meets minimum eligibility requirements. So the appraiser is going to walk over to the hot water on the kitchen sink and turn it on. When hot water comes out, he will check a box. Hot water heater works. The appraiser is going to walk over to the thermostat and turn it up. And when the heat turns on, he's going to check a box. Heat turns on. Right? The home inspector is going to go down, rip out the guts of that thing, tell you when the last time it was serviced of, give you a life expectancy on how long that thing is going to last you, and tell you how much you need to budget to replace that thing. Again, misconceptions. The home inspector is a little more detailed, only for you. Appraisal is less detailed, only for the lender.
Protecting the lender's best interest. And again, I think that's a really great thing to bring up when we talk about that home inspection process, because I tell everybody, number one, if you home inspect and you make discoveries that you are uncomfortable with as a buyer, then fine, we release it and we send a mutual release and we move on. Because I think you have to realize that the home inspection money is never coming back. So once you spend that money for your home inspection, obviously, and if you make a determination based on discoveries that are, outside the norm, because there's always going to be things on a used house, guys. You're going to have drips and draps. It's not intended to rebuild the house, but it certainly is intended to look for major structural or fundamental functioning parts, furnace, air, roof, like the fundamentals of the house, because there's always going to be the cosmetic side or the little maintenance things that need to be done. But again, do you, want to be aware of a faulty furnace or an air? Absolutely, because those are big ticket items that, like I said, typically as a first-time buyer, especially, you don't have that kind of money to replace those things should you move in and 6 months later they fail. So, the money that's spent on the home inspection, it might cost you $400, $500, but it's the biggest investment of your lifetime. And, if you make discoveries on that home inspection that are not comfortable, again, the $400 or $500 is gone. It's not coming back. But, it's a small amount of money to pay when you think about the kind of money that you're spending. So, again, the home inspection and the appraisal process are two separate processes, but that's part of the education of the home buying, because again, for a first-time buyer to understand every step of this process, there's a lot to it. And I think that's where, when you have great buying agents, such as what I'm blessed with, I think, we're there to make sure that you as a consumer, as a home buyer, understand where the next step is and what you should be doing. So Mindy, did you have anything to kind of interject on that?
Yeah, thank you. Yeah, there's just a couple things so after all of that happens, and I just want to mention two things in particular that I think are important. Number one is fraud is on the rise. So with wiring money, so the lender, William, will give you an amount, we'll give you the amount, but I mean, you'll have an amount oftentimes to bring to closing. And usually when we do the wiring, you just need to make sure that you're communicating with us. And we have lots of things in place to make sure that happens. But I just want to bring that up, number one. And then number two, just the idea that we would require a wire in most cases, and you could do a certified check if it's under $10,000 to bring to the closing table. So we get a lot of questions, especially with a first-time home buyer. So I just want to bring up those two things. And in the event that you do a wire, you can just we will give you an actual piece of paper when you come into the signing. If you want to do that, we can send it to you, and you just need to make sure that it is from us. And then you take that wiring information to the bank and wire this information, this amount. And it's a very simple process. So often I like to mention that because I think it's very important, especially in the day and age that we live in. So
yeah, absolutely. And I think one more key factor, and this comes to the lending side, do not go buy anything. I don't care if it's $50 piece of furniture. Do not open new accounts if you know you're going to start on your search. Do not make any major purchases, a car. Again, it doesn't have to be much of anything to impact you. So, we've had people that in the process, for whatever reason, decide to go buy a car, and ultimately they almost didn't qualify because of that major purchase. So just word of advice. And again, William, if you want to nod your head.
Oh, yeah, I pulled this up. So I'm sharing my screen that's got the do's and don'ts.
Yeah, there you go.
Mortgage.
Perfect. Yeah.
So these are kind of the big things that you should know. Something that's very common in our area is people saving cash at home. I would say that it's great that you have a safety net at home. Unfortunately, in my business, cash at home is bad news, right? You can't take stacks of $100 bills to the bank and deposit those, or you'll have to wait 60 days to buy a home. There's this heavy level of scrutinization of your bank account going back 60 days from when you buy. So if you've got money saved at home, use it to pay your bills. pay your rent, pay your electric, pay your
Mhm.
gas. Don't put it in the bank. Start building up. Let that paycheck sit in the bank, right? Get your paycheck, let it sit in the bank. Use the cash you have at home to pay your regular recurring bills. Same thing if your family says, hey, you're buying a home, we'd love to help you. Don't let them give you stacks of $100 bills either. There's a process that has to be followed when you get a gift from a family member. A check, if they want to do it and they want to do it before you're with a lender, a check is always the way to do that. Obviously, don't quit your job. Don't change jobs. Don't start a new job. And the most important one of all, please don't buy furniture for the home that you don't yet
Everybody does that.
own
Yeah.
before you own the home. Really big deal that you don't go. There's this excitement, right? Everybody, I'm this way too, guilty of always being one step ahead. Everybody's always one step ahead. This is just how life is, but you can't get one step ahead if you don't own the home yet, right? So you can't. It's fun to think about decorating your home and what we're going to put in this room and what furniture we're going to get. But don't go buy that furniture until
No.
the keys are in your hands and you're ready to move in, or you might not be able to get the home because you went and opened new debt.
Yeah.
Don't trade in your car. Don't buy new cars. Don't go save 10%.
And if you want to quit your job, that's all fine and dandy, but wait till after you close on the house, then quit your job.
Yeah, I mean, all of these things, I would
go
say
get that new job, right?
Yeah, some of this stuff, like it, as Tammy said the whole time, it's just a lot, right? And we know that. So some of this stuff, really, you want to just focus on what do I need to do to buy a home? What you need to do to buy a home, first-time home buyer. Start looking at your credit. If you've never seen your credit, you should. You should know before we know. Go use Credit Karma or a different app. Take a look at your credit. If you have no idea what you're looking at, that's okay. At least you know. And then when you call a lender and they say, well, this is this, you can begin to articulate an answer instead of being caught completely off guard by what they're asking you, and start trying to figure out where you get your pay stubs, where you get your bank statements, where you get all that stuff. Because once you get to that point, that this is the funnest part for me. You get that pre-approval letter. We get to just hand the baton over to Tammy and say, Tammy, go find him a home, right? We're done for now.
And I have to tell again, the folks that are joining us tonight, one thing you will experience from working with myself and my team is just an incredible sense of urgency. And if I can say anything, with the market the way it is, certain price points, if you're that $150,000 buyer and you hop on and voila, there's that house, guess what? You have to have somebody that's willing to go that day, because that's how the market is. And that's how it always has been in many price points. So if I can say anything, our sense of urgency is there. It's spot on. There's not one person on my team. We are a large team of women, but I have to say they're amazing. We do have John Zupi, who works on the team. John does, of course, the contractual side with me, which typically buyers will not ever meet John or anyone else on my team. But, from listings, I have Maddie, who does my social media. That's all she does for me 5 days a week, full-time job, social media. She's amazing. Graduated from Akron U. Again, to do this business and to do it right, the materials that we provide our buyers, the education process that we give them, it's tremendous. So, we could show up and do what probably most of the agents do, which is just probably not be at all prepared. But I guarantee you, my gals show up, they're prepared, they're knowledgeable. And not only that, we really do surround ourselves with premier people in the business, because, again, your knowledge as a first-time buyer is only as good as the people that you are surrounded by. So, and it's just like anything in life, right? But I want to thank, Mindy for her time. Again, I know it's tough with everybody in the evening, and we've all worked long days, and, we're continuing on tonight. But, and again, I feel like we could go on and on and on, especially about the lending process, because I can only stress to those that are on here tonight, the importance of understanding the different programs that are out there, be it the Community First, FHA, VA, conventional, again, all worthy programs, but you have to be educated about them in order to make your decision as a buyer and know where you fit into this whole puzzle of home buying. And again, it's a little bit of a learning curve, but that's what we're here for. So William Dawes, thank you. I know you have young kids as well, so hopefully I didn't interfere with dinner tonight. So
No, I'm in the basement and they're upstairs banging around. So if you heard little feet running across, those are the little guys. Just remember that there are options for you to buy for very low money down, possibly even zero down, just because you're a first-time home buyer. You don't, this misconception that you got to have 20% down, you got to have 5% down, depending on where you are credit-wise and income-wise, you might need zero money down. And that's great. Even if you've saved $5,000, $6,000, $7,000, wouldn't it be great to move into your new home with that?
And still have your $5,000, $6,000.
That's exactly right. Yeah.
Honestly,
so thank you.
It is all very, very realistic and very possible. So again, I think, just educating and learning is 90% of this process, because there's so much out there that, people are just not aware of. And again, I think just, come to the table, ask us questions, and we're more than happy to help. So again, thank you all for coming this evening. I know everybody's has busy lives and busy schedules, but please reach out to us at tammygrogan.com. We have a great website. You can also, just go there and give us a phone call, because we'd be more than happy to help. So you can read the reviews that are out there, because we have some pretty outstanding reviews as far as what people have to say about working with us and the team. So thanks again. Have a good night. And again, thanks to everyone for coming.